Welcome back to another episode of The Wealth Effect. Today, we're talking about one of the most searched topics in finance, passive income. Passive income is one of the most powerful and sought after concepts in modern finance. It's the promises in late night YouTube ads, money that works while you sleep, wealth that doesn't demand your constant presence. But this dream, like most things worth having, is more complex than it seems. It isn't free, it isn't easy, and it's truly never passive, at least not at the beginning. Building passive income is not about chasing the next get rich quick scheme or jumping on trends. It's about doing the hard work upfront, investing not just your money, but your attention. Passive income is not merely a strategy, it's a worldwide view. It reflects a belief that time is our most valuable asset and should not be traded perpetually for money. At its core, passive income is about the ownership of assets, systems, and intellectual property that continues to yield value after the initial effort. Section 1: Active versus passive income. Understanding the difference between active and passive income is essential for financial independence. Active income is straightforward. It's what most people know. You show up, you put in the hours, and you get paid. A job, a freelance gig, it all operates on the same equation: time in, money out. The problem is, the moment you stop working, the income stops too. Passive income, on the other hand, income that continues to flow with little ongoing effort after the initial work has been done. Examples include rental income, dividends, royalties, or earnings from digital products. It's important to note, however, that passive income is rarely ever 100% passive. It usually requires a lot of upfront work, capital, or both, followed by ongoing management efforts. The key distinction is leverage. With passive income, you create a system or acquire an asset that works for you. This shift from trading time for money to create recurring value is the foundation of long term wealth. Section 2: The myth of easy money. We live in an era that worships ease, but ease is not the same as freedom. Passive income is often sold as effortless, when in reality, it's anything but. Real estate, dividend investing, royalties from creative work, online businesses, they all require input, maintenance, decision making, and emotional restraint. In fact, one of the most active parts of passive income is managing your own mind, resisting the urge to spend, the temptation to over leverage, and the lure of more, more, and more. We live in a culture obsessed with shortcuts, but real wealth has never come from shortcuts. It comes from strategy, from patience, and from a willingness to do what others won't, so that later you can live in a way they can't. Section 3: Start where you are. Too many chase passive income without first understanding their own relationship with money. They imitate without introspection. The first step is to take inventory, not of your net worth, but of your habits, your mindsets, and your goals. Are you spending more than you earn? Do you invest with conviction, or do you chase the trends? Are you building streams of income that align with your values? Start with one stream, study it, understand how it grows, then move on to the next. There is no rush. A single check from a rental property or a dividend paying stock won't change your life. What will is the system behind it: the automation, the habit, the structure that ensures consistency. Passive income needs monitoring and protection from external threats. You must check your emotions during a bear market. You must resist the impulse to cash out early. You must reinvest. If your income dies the day you take a break, you don't have freedom. You have a job, even if you own the business. Section 4, the building blocks of passive income. There are several foundational elements to building passive income. The first, capital. Whether it's time, money, or knowledge, you need to invest something upfront. Two, assets. These include anything that can generate income over time: real estate, stocks, digital products, or intellectual property. Three, systems. Automating process, hiring help, or using software to remove yourself from day to day operations. Four, scalability. True passive income comes from scalable efforts such as digital products, investments that grow over time. Five, maintenance. Passive income does not mean zero involvement. Every stream will require some degree of oversight or upkeep. Understanding and combining these building blocks allows you to construct a diverse portfolio of income that reduces reliance on any one source. Section 5, different possible passive income streams. 1. Real estate. The classic investment, real estate has long been a favorite among passive income seekers. Rental properties generate consistent cash flow and often appreciate over time. There are multiple strategies. Check out our Pocket Buy episode on it, but here are three examples: buy and hold, purchasing real estate properties for long term cash flow and appreciation; short term rentals, platforms like Airbnb allow property owners to earn more per night, though they require more maintenance and management; REITs, or real estate investment trusts. These are publicly traded companies that own income producing real estate. Investors earn dividends without actually owning the property. The power of real estate lies in leverage, using borrowed money to control an appreciating asset. Combine that with tax benefits like depreciation and mortgage interest deductions, and it's easy to see why real estate is a cornerstone of passive income. 2. Investing in the stock market. The stock market offers numerous avenues for passive income, including dividend stocks. These are companies that share profits with shareholders in the form of a regular payment. Index funds and ETFs. These provide broad market exposure and consistent growth with low management fees. DRIPs, which are dividend reinvestment plans. These automatically reinvest your dividends to buy more shares and compound your returns over time. Investing requires discipline and long term thinking. It isn't about timing the market, but the time you spend in the market. Passive investors focus on building wealth steadily, resisting the urge to cash out quick wins. 3. Digital assets. Content and code. The internet has unlocked infinite possibilities for creating passive income. A few of them include online courses that taught once earn income over years. Platforms like Udemy, Teachable make the distribution of the content simple. YouTube channels and podcasts. Ad revenue, sponsorships, and affiliate links create a steady source of income. Ebooks and audiobooks. Write once, publish everywhere. Amazon, Audible, your own website, apps, and software. Build a tool or utility for people to pay monthly to use. Cryptocurrencies. Some cryptocurrencies allow you to stake them, meaning that you lock them away for a certain period of time, and in return, you earn interest over that period of time. The key is to create something of value that people would want to seek out and buy. 4. Royalties and intellectual property. Intellectual property is a powerful wealth building tool. A few of these include music royalties, where artists get paid every time their song gets played; patents, where investors earn fees or licensing deals from companies who use their technology. Trademarks, brand elements like logos and names can generate licensing income. These forms of passive income require a lot of upfront work, creativity, and legal protection, but can generate income for decades. Two things to keep in mind when planning your passive income. One, business systems, automation and delegation. Entrepreneurs can transform active businesses into passive income through automation and delegation. Two, standard operating procedures. Make it easy to train your staff, virtual assistants, and employees that take over daily tasks. Software automation handles emails, payments, scheduling, and more. The goal is to build a system that runs with minimal input. Think of it as buying your time back. Two, tax efficiency. Wealth isn't just about how much you earn, it's about how much you keep. Passive income often enjoys tax advantages, such as capital gains, are taxed at a lower rate than regular income. Real estate depreciation reduces your taxable income. Qualified dividends are often taxed favorably as well. Understanding how to legally minimize your taxes is a crucial part to maximizing your passive income. Section 6. Passive doesn't mean permanent. To be financially free is not to live with limits, but to live with intentionality. The irony of passive income, once it starts working, it demands more wisdom, not less. More self control, more vision, more courage to say no to bad deals and unnecessary upgrades. Passive income is most powerful when it gives you the space to focus on what matters, to write, to build, to be present, to serve. It's not an escape from life, but a deeper engagement with it. Passive income doesn't mean you stop working. It means you work on different things. Markets change, real estate cycles, businesses fade, laws shift. Just because something worked last year doesn't mean it'll work for next year. There's a difference between making money and building wealth. Money is short term, wealth is generational. True passive income is a foundation. It's what supports life full of meaning, not just materialism. So ask yourself, am I building something that will last? Something anti fragile? Something I'd be proud to pass on? Something I'd be proud to pass on? We should build not just for ourselves, but for those who come after us. This is how our legacies are made, not in big wins, but in quiet, consistent, compounding efforts. In the end, passive income is not about laziness. It's not about escape. It's about freedom with structure, autonomy with responsibility. Money is a tool and not an idol. You don't build wealth by hoping. You build it by showing up, by planning wisely, and by thinking long term. You can buy back your time one decision at a time. Thank you for tuning to The Wealth Effect. Until next time.